Hello everyone, welcome to my lecture on the topic national income. These are the concepts which we are going to learn under this particular topic, that is definition of national income and its features, importance of national income, concepts underlining the measurements of national income, methods of computing national income, difficulties in measurement of national income and limitations of national income. The definition of national income. National income means the value of goods and services produced by a country during a financial year. It is a net result of all economic activities of a country during a period of 1 year or one financial year and valued in terms of money. So the formula used to calculate the national income is equal to consumption plus investments plus government spending plus net exports plus net factor income from abroad plus minus indirect taxes minus depreciation. Features of national income. It is macroeconomic concept. It is a realized flow of goods and services. It includes all goods and services produced in an economy from all the sectors that are contributing to the economy, that is primary sector, secondary sector and the service sectors. It is a money valuation of goods and services which has some value or the final value. It is a net aggregate value and it is for a period of within a period of one financial year. Importance of national income. National income helps to understand a country's economic health, growth and standard of living and helps the economist in formulating economic policies for economic development of a nation. Second one is inflation and deflationary gaps. For timely anti-inflammatory and inflationary and deflationary policies, we need aggregate data of national income. If expenditure increases from the actual output, it shows inflammatory gaps and vice versa. Budget preparation. It shapes the budgetary policy of the government, including borrowing and taxes, in order to neutralize the functional fluctuations of income and employment in an economy. And also, the government adopts a deficit or surplus budget to arrest depression or inflation in an economy. Standard of living. The national income data assess the government in comparing the standard of living amongst countries and different people living in the same country at different times. It is also important for the purpose of defense and development, as it helps in estimating the expenditure and to bifurcate the national product between defense and development purposes of the country. From such figures, we can easily know how much can be set aside for the defense budget. The next one is the concepts underlying measurement of national income. So these are the following concepts which are used to assess the national income. That is gross domestic product GDP, gross national product GNP, net domestic product NDP, net national product NNP, personal income, disposable income and net national product. We'll begin with the first one, that is gross domestic product. The total value of goods and services produced within the domestic territory of a country during a financial year or an accounting year, and which does not include earnings of people working abroad as well as foreigners working in the country. These are the conditions, or these are the things which we consider and which we are not going to consider for the purpose of calculation of a gross domestic product. So GDP is equal to consumption of goods and services plus gross private investment in capital goods, and G is government expenditure, and X minus M indicates exports minus imports, or else referred as a net exports. Next one is gross national product. Gross national product is a total measure of the flow of goods and services at market value resulting from current production during a year in a country, including net factor income from abroad. So GNP can be expressed as the following equation, that is GNP is equal to GDP plus net factor income from abroad. Now in this calculation of GDP, we are going to consider the net factor income from abroad. So GNP includes the following: consumer goods and services, investments, government expenditure, net exports, as well as net factor income from abroad. Next concept is component of national income is net national product, that is NNP. NNP, the national product, is the market value of the goods and services after allowing for depreciation. So NNP is equal to GNP at NNP at market price is equal to GNP at market price minus the depreciation, or it is nothing but GNP minus depreciation. This is NNP at factor price is equal to NNP at market price minus indirect taxes plus subsidies. Personal income. Personal income is the total money income received by individuals and households of a country from all possible sources before direct taxes. Therefore, personal income can be expressed as national income minus corporate income taxes minus undistributed corporate profits minus social security contribution plus transfer payments. Disposable income. The income left after the payment of direct taxes from the personal income is called disposable income. Disposable income means the actual income which can be spent on consumption by the individuals and families. Thus, it can be expressed as disposable income is equal to personal income minus direct taxes from consumption approach, that is direct disposable income is equal to consumption expenditure plus savings. This is the final amount that is left over, or the final income that is left over in the hands of an individual for his spending purpose. Per capita income. Per capita income of a country is derived by dividing the national income of the country by the total population of the country. The formula is total national income divided by the total national population. Now, generally, these are the different methods of measuring national income. That is, first one, income method. Under this income method, we add net income payment received by all the citizens of the country in a particular year. So basically it is national income is equal to the wages earned plus the rents received plus interest plus profits plus the net exports. So the income that is received from the various factors of production in an economy is put together or added together will be giving us the national income. But national income received in the form of transfer payments are omitted here. The next one is product method. The product method usually the production that is being done from all the sectors in an economy are taken into consideration. That is primary, secondary and service sectors are taken into account for the calculation of this national income, that we call it as a product method. Next one is expenditure method. Under this expenditure method, it's a total expenditure that is summed up together by the society is considered here. This concept is backed by the assumption that the national income is equal to national expenditure. Under this expenditure method, we are going to assume national income is equal to C plus investments plus the government expenditure plus X minus M. So difficulties in measuring national income. The lack of reliable data, statistical problems, that is statistical figures may not be accurate because they are based on sample surveys. So they cannot be authentic enough to derive at the calculation of exact calculation of the national income. Welfare is not measured. Different countries have different methods for estimating national income. It makes it difficult to compare it, and exclusion of real transaction can be excluded when calculating the national income, which also is not going to give the real value or the real assessment of the national income. Valuation of inventories is not considered when calculating the national income, whether it is a market price or at a factor price. Imputed income is not considered when calculating national income. Valuation of government services is not considered when calculating the national income. So this may be the drawbacks or the limitations in making the calculation of national income. To be more accurate enough. With this, I'm going to end up this session here. Thank you.